Now that we've learned our empowering definitions, we will now be using them for debits and credits. These are the accounts that we used in last video. We are going to be adding video income, accounts receivable, delivery expense, repair expense, accounts payable, owner's capital, and withdrawals. If it says no, then you cannot record a transaction on that side. Transaction A. We did a service for customer Alan for $100. He promised to pay in the future. Accounts receivable changes because we can receive money, and video income changes because we did a service. If there's a no X on the debit side, it has to be credit. And if video income is credit, accounts receivable is debit. Transaction B. Rex Repair Shop did a repair service for us. We promised to pay him $85. So it's accounts payable and repair expense. Repair expense has a no X on the credit side, so it has to be debit. And if repair expense is debit, accounts payable has to be credit. Transaction C. Did a service for Betty and she paid us immediately with cash, $95. So, service income changes and cash, because cash changes because she immediately paid us, so we're getting more cash, and service income because we did a service for her. If service income cannot be debit and it has an X on the debit, it has to be credit. And if service income is credit, cash is debit.
Boom.
Action D. Paid FedEx immediately with 7-day, $75 cash for a delivery today. So delivery expense and cash. Delivery expense has a no X on the credit side, so it has to be debit. And if delivery expense is debit, cash has to be credit. Transaction E. Owner withdrew $28 cash from the business. So, cash will change, and I think withdrawals.
Correct.
Because, cash will, withdrawals has an X on the credit, so it can't be credit. So withdrawals is debit. If withdrawals is debit, then cash must be credit. Transaction F. Alan paid us half of what he owed us from transaction A. So cash will go up because we got more cash, and accounts receivable because we received half of what was in transaction A. So accounts receivable and cash, neither of them have an X, so we don't know immediately which one is which one is debit and which one's credit. So cash, you're getting more cash, so you would get plus, and it's an asset, so plus is this side, and accounts receivable, it's you have only 50 left to go, and you got half of what was in transaction A, so accounts receivable is an asset too, and it's minus, so it has to be credit. Action G. We paid Rex Repair Shop only $65 of what we owe for transaction.
Oh, I meant to do B. I meant to say transaction
B. Well, if it was $85 and we paid $65, we still have a little bit left over. Accounts payable and cash will change. Neither of these have an X on any side, so again, we don't know immediately. So cash, we have less cash, and it's an asset, so it has, and it's minus, so it has to be on the credit side. Accounts payable is a liability, and if it's minus, it has to be a debit. Transaction H. Owner brought $700 worth of equipment from his home into the business. Equipment will change and owner's capital will change. Equipment will change because the company has more equipment, and owner's capital will change because the company, well, the owner is giving more equipment.
Mm-hmm.
So equipment is an asset and it's plus, so it has to be debit. Owner's capital is also plus, but it's an equity, so it has to be credit. Transaction J. Instead of paying cash, we gave the bank $300 of equipment to decrease the bank loan. So bank loan will change and equipment will change. So bank loan will change because you're decreasing the bank loan, and equipment will change because you have less equipment. So bank loan is minus and it's a liability, so it has to be debit. Equipment is also minus and it's an asset, so it has to be credit. It doesn't have to be one account debit and the other account is credit, as long as total debits and credits equal each other after each transaction. Okay, did service for customer Candy worth $200. She paid $50 cash and promised to pay $150 later. So service income is $200, cash is $50, and accounts receivable is $150.
And what are the debits and credits?
So the service income has a no X on the debit, so it has to be credit. Accounts receivable is plus because it's an asset, and plus is debit, so it's debit. And cash is also plus, and it's also an asset, so it has to be debit also. Transaction L. Did Rex did a repair service for us worth $130. We paid only $30 now and promised to pay the rest later. So it's accounts payable, repair expense, and cash. So cash changes because we paid $30, so we're giving away money. Accounts payable because we can pay $100 later. And repair expense because you have to pay an amount of money.
By the way, folks, Serina really does know her debits and credits. And if you would like to see the footage of Serina learning her debits and credits, you can vote yes in the survey that's coming at the end of the video. You could also leave a comment or send me a message on this very website. And by the way, please mention if you think this is a good intro to the videos.
Hi, I'm Uncle Mark.
And hi, I'm Serina May Jackson.
And this is the Debits and Credits Show. Learn your debits and your credits. Learn your debits and your credits. Learn your debits and your credits today. Learn your debits and your credits. Learn your debits and your credits. Learn your debits and your credits today.